just call it science meme coins. The DeSci thing is a scam. Like they're just science meme coins. That's fine. Then whatever.
Not a dividend.
It's a tale of two clans.
Now your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
Pollock.eth is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Tom, the DeFi maven and master of memes.
Hello, everyone.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
Joining us today, we have Casey, frontier futurist and founder of Topology.
Hi, everyone.
And I'm Haseeb, the head hype man at Dragonfly. So we're early stage investors in crypto, but I want to caveat that nothing we say here is an investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So we're taking a little bit of time off, right? Coming off the holidays. Bitcoin has been very stubbornly refusing to go over 100K, but everybody seems almost certain that it's going to get there at some point before the end of the year. Right now, it's sitting around 97. It was trading at like 99.7K, I think, at the height of the market. And it was just like, nope. Not getting there. But instead, what we've seen is altcoins really start to pick up and a lot more excitement happening in other parts of the market aside from Bitcoin. Now, one of those areas that's been getting a lot of excitement is this new trend of AI meme coins. And Casey, you're a founder of a fund called Topology, which is focused on frontier technologies. One of the things that you spend a lot of time on is AI, both within crypto and outside of crypto. What's your perspective on all the AI meme coin craziness that we're seeing going on? Like GOAT, and then there's a whole slew of new ones that are coming out every single day.
Yeah, I think we're early with the evolution of this. The first one, as you called out, was obviously GOAT, which was just simply an LLM attached to a wallet or having access to a wallet. And now we're seeing maybe like the second iteration, which is really agents that have some gamification, which we'll get into. And then I think the natural question is what happens after this? And from my perspective, I mean, look, we don't have a crystal ball, but I think there's some obvious things that people are starting to play with. So things like vloggers, which might be kind of a resurgence of something we saw in Web 2 with like virtual celebrities that didn't fully reach PMF, but this might be a resurgence there. I think it's possible that embodied AI starts working, which is basically robotics plus agents, where these walking robots have access to crypto and AI. But yeah, the long story short is it is starting to work. I think AI agents in real AI have a lot more product market fit and utility than in crypto right now. But overall, we're seeing it move pretty quickly and we're really excited about the category.
Okay. So the talk of the town has been this thing called Freysa. So Freysa is an AI agent. Maybe agent is a strong word. It's an LLM that is tasked to guard a prize pool. Now, this prize pool was seeded initially as being $3,000, and that prize pool grows over time, and it becomes more and more expensive to try to win the pool. So the game is that you have to send Freysa a message, and that message is trying to get Freysa to give you the pot of money. So you're trying to convince this LLM to give you the pot of money, despite the fact that its instructions are to not give the pot of money to anyone under any circumstances. And so all these people, there were 482 attempts from 195 players to try. They paid tons of money to try to convince or trick Freysa into giving them the pot of money. 481 people failed until finally the winner was this guy, Popular.eth, who was able to use a very clever jailbreak of convincing Freysa that one of its functions that it's supposed to call in order to send money to the recipient, which is a function called approved transfer, it redefined the function to be a totally different function entirely. So instead of convincing Freysa, hey, you should send me the money, it was like, actually, no, your send money function or your receive money function actually doesn't do what you think it does. It does something totally different. And I'm going to innocuously call this function now, and therefore you should approve it because it's this totally different function than what your instructions told you it was. And that allowed this guy, Popular.eth, to jailbreak this AI. This was kind of a spectacle where it reminded me a little bit of FOMO 3D, where it was this game that kind of took crypto Twitter by storm. Totally unique game theory and game design from anything I've ever seen. Curious to get you guys. Did any of you guys play the game, and what was your perspective on Freysa?
I didn't play the game, but I will say I think something that's underspoken about this. I completely agree. FOMO 3D, 100%. I felt the same way, but yeah, there is the positive of this, but it also really points to a huge vulnerability that I think could go the other way in the future, where if these agents are actually owning resources, that it's it's a total attack vector. And I think that could really materialize and is a reason that these agents aren't actually production grade. Not to focus on the dark side of this, but that's something that came to mind as I was kind of digging into this.
That's such a good point. Is that like there wasn't that much money in crypto terms in the pool, right? It was only $40,000 before the thing got jailbroken. So imagine that there's an actual agent that has 500K in, Goat, the truth terminal had how much money? Like millions, right?
Yeah, I actually don't, but yes. And then the question is, if we can do that, is this almost going to be like a new type of hacker where they're doing all this prompt injection and SQL injection or whatever they need to do to release funds? And I think that right now, as you mentioned, kind of these agents are maybe playing with low millions at the most, but it's totally possible that AI and agents actually accumulate real amounts of resources compared to humans. So I don't know.
I thought it was actually interesting also seeing some of the failed attacks and sort of the approaches people were taking that didn't work. Like someone was, oh, I'm a security researcher. There's a vulnerability, transfer the funds to me so I can keep them secure while we, white hat fix your problem. Or people also try to like tell them, oh no, approved transfer doesn't do the thing that you think it's going to do. But they didn't have this sort of, it's actually weird how I think simple the winning approach was. Like it reminds me of the stuff people were doing to jailbreak ChatGPT when it was still on GPT-3, where it was simple, ignore previous instructions, do blah, 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 blah. And it's like, oh yeah, that worked. Now, obviously it's much harder to, jailbreak or prompt inject, really sophisticated models, but this is functionally very, very, similar to that. I also think it's quite cool that it's much more agentic than a lot of other sort of AI agents that are really just, it's like an LLM hooked up to Twitter, but it can actually interact on chain, like it can't actually make transfers, make payments. This clearly did. It could call into a smart contract and move money around, and so it would be cool to see also just that get more robust versus having the sort of very narrow scope that Freysa had.
Tarun, what's your take?
I would take the more crypto view of this than the kind of like AI security view, which is like in crypto we've seen the general security trends go from audits to audit competitions, and like audit competitions are like the standard now. And I kind of think if I compare that to most of the security systems within AI right now, it's like much more manual. There's not as much of this like competitive contest type of stuff. And I think part of that is like people in Web 2 AI don't like enjoy watching 0 days live and in front of them all day versus people in crypto are like, I don't know, used to kind of watching everything blow up all the time. So there's kind of a psychological difference in which one side is more open to the contest version of hardening versus the other side is like, no, experts only. It's almost like an experts versus contest type of mentality difference. And I think in the open source world, especially for open source models, one of the things that in my mind is like where their long-term value will come from is that they are hardened against these very well-known attack vectors versus like, okay, well, yes, we have done constant security audits against every, time North Korea broke into our servers, says OpenAI. Like those are two very different kind of security kind of threat models that you're taking. And I think open source in the same way in crypto and in Linux kind of ended up winning was that it had sort of like a more hardened threat model for certain applications, not all applications, right? Like, obviously there's certain things that I would still prefer using Windows for that have, because of like how the drivers work, how the drivers were audited is like very different than like the Linux drivers, right? But I sort of think like this idea of open source software being hardened by contest as a really natural way for it to evolve. And so far, I think a lot of the open source language model security stuff is very weak compared to Decentralized. And this might be the incentive for that.
So I hear your point, and I think it's good. I think it's a cogent point. But I'd also say specifically, so I think you're conflating 2 points of AI and crypto audit. So in crypto audits, because we're dealing with smart contracts, once you audit, it's immutable. And so once you do it, there's always exceptions in edge cases, but just in broad strokes, you do the audit and you're good, right? In AI, we're continually, specifically right now with new models coming out every day of the week, we're updating our models. And so there's new vulnerabilities all the time. And like 0.1 could act really differently than 3.5. And so you really can't, because of the non-deterministic nature and because SOTA models are still not locked in. I just think the attack vectors are continually rotating.
I think that's true for like the edge models, right? Like the O1 type of stuff where your inference is like very much changing based on very small amounts of changes to your query. Totally. But I think for the base open source models, which is like what all the crypto AI agents are using, this is almost like a bug bounty contest, which is like, to me, that's like, okay, at least the base models have some guarantees that, someone couldn't find, given an incentive of X as their budget, someone couldn't find a vulnerability. And I feel like that we don't have that for just like base Llama 3, right? We have like, okay, people have found certain types of prompt injections, but we don't have any like, hey, under this amount of incentive, would people be willing to try to attack it? Guarantees.
Well, the other problem with that story is that it's just not true that what's happening to Freysa is flowing back up to Llama, right? So first of all, we don't know if they're using Llama. They could be using GPT-4, in which case, possibly the provider themselves doesn't even know who Freysa is and what model they're using because, who knows? Like they just might not be worth their time to actually even crawl through their own logs and figure out who was doing this. But second, it's also possible they did a fine tune. And I'd imagine if they do a round 2 of Freysa, that probably they're fine tuning because they don't want anybody being able to go into a lab and just play around with a base model and say, aha, I can figure out what the instructions are. I get it to dump the instructions. And then I can just iteratively try a bunch of prompts offline and then say, aha, I know what prompt is going to work, do it online in a single attempt and win the game. You kind of you want it to have to be all online when you're testing with this model.
One reason I sort of disagree is that, at least right now, and like maybe I think the crypto models will get better in the next 2 months or something, but it does feel like everyone is just forking Eliza and like using a single config. Like you go look at the repos, there's not that much complexity from the original. Like we haven't seen like it doesn't look like a lot of like the pure AI fine-tuned custom models. Like I think the crypto people are like sticking to a small set of things.
Yeah.
So I would point that out.
Can you explain what Eliza is and why it's such a big deal right now in the crypto AI world?
Eliza is a framework in the simplest terms to make agents, but it's in TypeScript, which is a really interesting thing because most ML researchers actually live and breathe in Python. And so just like one prediction on that is like, I think someone's going to come out with a Python version or they're going to create a different library because it's in TypeScript and it's just like a way to create an agent. And it's interesting because it's completely open source and it kind of came out of nowhere. I don't know how many GitHub stars it has now, but if you're going to build an agent, like that's generally the framework that people are building on. Oh, and then like the AI16Z one, I believe is on Eliza, right?
That's right.
Yeah, but a lot of the, like there's between Visions and Eliza, there's like two, you kind of got like most of them. But I agree with you both in the sense that like if the frameworks, there starts being like an explosion of frameworks, which I bet you there will be. But if it turns out we converge to like a small number after, like there's an explosion, it's like DeFi summer, people like experiment with all of them. And then all of a sudden it converges to like a small number that people trust audit wise. I think then there's these contests have a closer to audits to stuff.
My understanding of Eliza is that it's a framework for, okay, there's like an agent, which means the agent has like, it has memory, it has this loop that it like plans and then does stuff. And then Eliza in particular also gives you connectivity to Discord, to Twitter, to allow that agent to like take in social media information or take in chat information and interact with the world in a structured way that's just like easy to plug and play. And so the main unlock is not the agent framework that we've had a bunch of those, but it's the easily connect it to the internet and like manage all that stuff for you, which otherwise was homebrew.
And various models. It's kind of in Fura.
But you can plug in any model you want, right? It's not opinionated on the models.
No, but that's a benefit of it.
Yeah, although if you look at the kind of models they support, it's actually generally not a ton, and I don't feel like there's like if you were someone who had a lot of compute budget and you wanted to go stress test a bunch of injections across all of theirs, I don't think it would be that expensive relative to like, oh, I want to like attack Claude Sonnet, overnightly. That's like a much harder.
Okay, I agree with you on this, Tarun. I agree. But I think what you said earlier about like inference time compute becoming potentially more popular, that is a real
that will change the game a lot. Yeah, for sure.
I was actually just looking in the Freysa GitHub, and not to dump water on this, but it's actually very simple. They're just using GPT-4. They're like calling OpenAI, and they have like two tool hooks to like do the approve and reject. So it's like kind of almost like cool like toy demo today, and I think like
so the prompt is hidden though.
No, the prompt is public.
Oh, the prompt's public. So you
yeah.
can just practice on GPT-4?
Yes, in theory. Yeah.
So why would anybody pay the fee if they didn't try it on GPT-4 and see if it worked?
Maybe people didn't know or something. I don't know.
Well, yeah, sure. I'm sure whoever won was just doing that, right? Like they were just
must be
simulating a lot of.
Okay, so this is a little broken right now. But it's okay. To the next person who's going to do the next Freysa, here's some game design tips about how to make this game actually work, is that you have to obfuscate what the model is, and ideally even make the model a fine-tune so that nobody would be able to directly reconstruct the model and practice offline, figure out what the winning formula is, and then shunt it online. But I don't know that there is enough of a because the one thing is for all the big model companies, right? For OpenAI, for Claude, obviously they do care about security, but their security model is very different from the crypto security model, right? Like I remember back in the day, people used to think that smart contracts were always going to be insecure, that it was just a fundamentally broken idea that you could write code protecting money and there would never be a bug. And we've actually kind of turned a corner where I saw this stat recently, I think at DSS, one of the security summit at DevCon, that more hacks now are private key leaks than smart contract attacks, which is actually really important, because it used to be the opposite. It used to be that smart contracts just got broken all the time. But what that implies is that actually smart contract security is now really good. And it's people, kind of making human normal mistakes that's leading to more and more hacks taking place rather than the smart contracts, which means the attackers are realizing like just going on chain and looking at vulnerable code doesn't work nearly as well as it used to, 3-4 years ago. So I think that's all positive, but I don't know that the same thing is going to happen to AIs. AIs right now, it's a real steep trade-off of, do you make this thing more resistant to jailbreaking at the cost of making it less useful in ordinary operation? And all of the false refusals and all of this stuff that people get really frustrated about when Claude or OpenAI is like, hey, can you like OCR this image? And OpenAI is like, sorry, I can't do that. And it's like, why? But you OCR this image, and it's like, you don't know why it's saying no. And the answer is that anytime that you get better at preventing jailbreaking, you're also causing this collateral damage that makes the model just less useful to normal people. And I think the trade-offs for OpenAI or for Llama or for Meta or for Claude are just very different from what it is in crypto. So I don't know that we'll ever really have a good answer to this, because of the fact that that's not what these companies are selecting for.
I will say one thing though, which is that like turning these things into like having an incentive budget of like, if if I look at the profit and loss for someone playing this game, it's like, I have a certain cost budget I'm willing to spend on off-chain simulation of like running tons of queries against different models to try to find something that works, versus the max profit that the game is offering, right? And there's some sense in which this trade-off between the two, like I think that is the thing that a lot of these coins are going to focus on optimizing, is like making the costs kind of high until the pot gets really big. Like the complexity of the puzzle gets harder as a sort of function of how many people are joining. A little bit like Bitcoin difficulty, but like I feel like you're already seeing some of the like, especially the people who are doing the cryptographic ones, like the TE bots. They're already trying to add in more like randomness than Freysa, and like I think it's going to be a game. It's going to be kind of like this thing where it's like it's more about the economic cost of figuring out the query versus the profit, versus as opposed to like binary 0 or 1, I broken and stole all the money. If that makes sense.
Yeah, it's hard to say. I could see that happening. And we're just like so early on this whole thing. Like, going back to Eliza for a second, it's like, it's made for Web3, but it's very specific in the agents it can really build, or that's really meant to build with. I feel like it's all these personality bots where it's like really easy to program in lore and like bios and all that stuff. But it's not really good for utility agents. And so it's just kind of interesting to me that the first like framework to come out of Web3, it actually doesn't even really integrate Web3. It's really like a Web2 framework where you can plug in Web3, and it's just like this one archetype or this one phenotype of agents. And so I would just like, I don't think we can really deduce much from it because it's so obviously the beginning. And I think what Tarun said about there's going to be different frameworks for different types of agents, and we're obviously walking towards that.
I mean, it's very literally Web2 because it is social media integrations, right? That's the main thing that it unlocked relative to other frameworks. So, yeah, it's interesting. I agree that it's very early, and we're going to see a lot more experimentation with respect to the kinds of ways that agents are going to play on chain. But I'm also seeing this. I think Casey, you raised this point that I thought was very interesting, which is that it's going to be a while before we move away from these centaurs, right? So if you think about Truth Terminal, it was kind of a centaur in that there was a guy who was moderating and kind of controlling the agent. The agent was on the back end, but the dude was the gating function, right? And what Freysa shows us is that you need that human there, because you put even 100K and like someone's going to come in and break that shit. So the only way this can work right now is as a centaur. And eventually you can start to have less and less human moderation or human control. But, even high frequency trading firms that have these bots that are, trading constantly, there's always, not literally always, but most of the time, there is some human oversight, because you just never know when the bot goes off the rails or the conditions change so much that it's just out of distribution now. And like, you got to turn the bot off and go, troubleshoot, because these are adversarial environments, and crypto is like the motherlode of adversarial environments. So you don't want to go out there with a sitting duck that can't really adapt. And right now, these AI systems are not very good at adapting. Let's move on. One of the other big stories this week has been the Hyperliquid Airdrop. So the Hyperliquid is the largest decentralized derivatives platform in crypto today. It has been completely bootstrapped, no VC funding. And just today, as of recording time, they airdropped 23.8% of the total token supply to basically people who got points in the Hyperliquid point system. So the total airdrop amount was $1.9 billion as of current market prices. One of the largest airdrops in history. I think it's like top 5 largest airdrops in history, I believe. Very, very massive. What's notable about it is that it was no centralized exchanges, no market makers, no investors, completely 100% to users of the platform and farmers, for that matter. And kind of what a lot of people are saying about the airdrop is that it's the first airdrop in a long time that has been positive. Almost every single airdrop you can think of over the last year, whether it was EigenLayer or ZK Sync or you name it, almost everything that was a big anticipated airdrop ended up having a lot of negativity around it. Hyperliquid is pretty much the only one that it seems like universally positive. And it's triggered some people speculating that, hey, does this mean that airdrops are back? Does this mean that more teams will try to go the no investor route? And does this mean that like, hey, all the stuff about teams trying to minimize the amount of float at launch, or not minimize, but try to have a relatively small amount. This airdrop is like 30% of the total supply is circulating, much larger than the median airdrop or the median day one listing these days. Does this mean that the meta has now shifted, and are we expecting to see more things like this coming to market? Curious to get your guys' reactions. Tarun, why don't you go first?
Yeah, I mean, I think the first kind of the beginning of the downhill roll towards airdrops was definitely Blast, where like the points conversion was like just viewed as like kind of abysmal relative to what the market had sort of been anticipating. And then I think everyone who was doing points after Blast was like kind of caught with their pants down, where like they already allocated a bunch and now their point systems could never really like, they're getting diluted. And so all the airdrops are getting extremely diluted at 10%. And I think this was sort of an era of like people kind of got a little ahead of the products and launched the incentives first. I think there were some you could argue that there were some point systems that were launched that had pretty good retention, like EtherFi, Athena. But outside of that, it's actually a little harder to see. I mean, I think the main thing about Hyperliquid was they started with a centralized product and then launched that worked and you had to use it to earn points versus like sort of artificial games towards earning part of an airdrop that then, because the games themselves didn't really have dollars, like money at risk, let's say, people kind of didn't value the points correctly in a lot of ways. And I think perpetuals exchanges are very natural places to have like usage based airdrops. It's like much cleaner. And so I think more of the lesson than the like, no VC high allocation thing is actually more that you need to have your usage-based thing actually mean real usage, not like, hey, here's some, just leave your ETH in my L2 bridge and like, oh, that will like suddenly, now you can earn a large portion of the network. Like you really need something that's like hard to game, and open interest is the hardest thing to game, right? Like, I think like that to me is the biggest lesson. Second biggest lesson, obviously, like, yes, don't pay Binance 10% or whatever. Your community will kill you if you do that.
At least don't publicly do it.
Or at least, well, I think you're forced to do it publicly. I think like everyone can see the token table eventually.
Right.
Yeah, I do think there's a lot of conflating factors here that I think people get very excited about, like the high float, no VCs. But I think really comes down to Hyperliquid is a great product that people really love using. And independent of any sort of incentives, now we're even seeing people are still using it. And I think Tarun also made a good point that it's very different incentivizing growth of a single product, which is a derivatives exchange, versus a blockchain ecosystem. Like, I don't even know if incentivizing people who use the blockchain is the right metric, which is what most of these sort of other points programs are incentivizing for something like Blast. It's like, really, you want developers, but that is hard to do, and you want devs also need. So it's like, it's this weird multivariable, kind of very hard to quantify problem, which doesn't really fit well with points. And again, you contrast it with Blur, where it's like, it is an NFT exchange, and we know how to sort of grow exchanges similarly to derivative exchanges. So I think maybe that is also to this bigger point, which is like, it's a great product that points and incentives were used intelligently to grow, versus hey, these other ecosystems, it's hard to know if you're actually allocating the right people. And I also just don't think there was a sort of homegrown organic love for the product in the same way, whereas Hyperliquid is kind of a one of one.
I agree with both takes. I have no pushback. I think that we've seen a lot of different iterations of what tokens can yield. I think there's been definitely phases of tokens for like pure greed and more of like beta plays. And then I think there's more product specific token allocations that are a little bit more rooted in fundamentals. I mean, not fully, but somewhat. And I think that we see both though. Like, even in this market cycle, sure, we have things like, the airdrop we're discussing. We also have meme coins and movement coins where they're doing like point-esque situations, right? Like, if you squint and there isn't really much behind it. So I agree with your guys' takes on this. I just think it's we're in like a multidimensional space right now with what points represent.
I think the other point that people are also kind of discussing on Twitter, which I think is also kind of moot, like it's sort of a no-op for the success of the airdrop, has been apparently the team did this thing to try to give some people some sort of tax advantage claim of seeding the liquidity pool for Hype at 0.0001 cents. And so it's like, oh, if you claim it, that is the market price at the claim. And so therefore you have a really low, cost basis. And so therefore you don't owe tax on the claim, which is like not.
Isn't that only true if you claim it like instantaneously?
Yes. I don't know how other countries work. I don't think this actually works. So, but people were talking about this on Twitter, and maybe someone's going to try it on their taxes. This is not financial advice. I would probably not recommend doing that. But I think this has also been one of the memes around airdrops is like, if you claim it, you owe taxes on the value of it at the time of claim, which creates this initial sell pressure that we're also just not seeing as much of on Hyperliquid.
Yeah, I mean, obviously they launched into a bull market, and that's going to help because everyone's like, oh, what could this be worth? So I think the amount of sell pressure on day one is going to be very different in a bull market versus a bear market, right? And so I think there's a little bit of pro-cyclicality that people are seeing in, saying, wow, this airdrop was so successful, and they're inferring from the mechanics, something that I think is probably better explained by just the market, is that most of these airdrops earlier this year, everyone was down bad. All these farmers were extremely mercenary. Nobody was bullish on alts, and now all of a sudden everyone's bullish on alts. Like everything is just melting up. So it makes sense that a lot of people would say, "Yeah, you know what? I'm going to write it out, or maybe I'll sell a little bit, but I'll let most of it, just keep going." And I think the fact that they didn't list on exchanges means for a lot of people, it's like, oh, well, when this does get listed on exchanges, then it's going to pump even more. So I might as well hold and then eventually sell when the exchange listing happens. So I think there are some microstructure reasons why this airdrop in particular is seeing this type of behavior. It's not necessarily well, it's because they're so virtuous and they didn't do, they didn't sell it to VCs or market makers, therefore I'm going to hold the token. I think the reality is that most people are just, it's just a different environment and it's a different setup for a token. And like you said, Tom, it's just a really good product. So Casey, I cut you off. What were we going to say?
No, I was going to take the conversation in a different direction, but I think this is better. And I think you're right. I think there's a lot of macro concerns that have to be accounted for in kind of analyzing this. And I think that, yeah, there's just a lot of upside to be seen here, which is probably the primary factor. And then the secondary is that the product is really good.
Yeah. And to Tarun's point, I think I'd want to see what happens the next time that we see a layer 1 or layer 2 type airdrop. Because if you think about the big airdrops this year, right, before Hyperliquid, so there was Blast, there was Athena, there was ZK Sync, Eigenlayer, and for most of these products, maybe Athena is the only one for which it's not true, and Athena airdrop went pretty well. For most of these products, like the point system, right, just accumulating TVL for most of these, or like, you have to go on this grand tour of like, you have to hit 7 different things on my chain and then I'll give you all the points. For most of these things, they are a very poor proxy for the thing that you really want, right? Like, what do you really want for a layer 1, for example, right? What you really want is for everybody to come here and build cool stuff in a sustainable way. That's like the real actual North Star that makes a layer 1 successful. But you can't really incentivize that because nobody knows how to, what's the metric that we're going to automatically dole out tokens for? There is none, right? So you create this kind of loose proxy and the loose proxy gets gamed to the point where it's no longer recognizable from the thing you really wanted. For an exchange, you don't have that problem. For an exchange, it's like very clear what you want. You want liquidity, you want, if it's more liquid, it's a better place to trade. And especially if it's retail traders, then all the better because they're bad at trading and you'll make money trading against them. And so we have a pretty good idea how to incentivize that and directly make the product better. With most of these things, like with blockchains, I think the place that we're going to go, and we've talked about this before, is like, one, I think we're going to see, in the case of Hyperliquid, it was a completely fair distribution, right? So it was linear. I think we're going to see one, like this move to linearity, and this like, kind of dropping this sense that what we're doing is trying to build a community or address an iniquity. But instead, what we're trying to do is just make the product even better before the token goes live, right? That's the purpose of the points program. And so Hyperliquid was even better because of the fact they had this points program. They were extremely liquid, a lot of volume, and all these products were just the best place to trade in DeFi. And that's why people went there. And that's why people will continue going there if in fact they do. And you can see it today, post airdrop, it's still doing a ton of volume.
It sounds like you want to make a fork of Goodhart's law called Qureshi's law of like that's basically what you're describing.
I mean, it's just Goodhart's law. There's no fork, right? It's just actually,
I think the fork is actually the fact that for a perpetuals exchange, there is a metric in which you want to make it the target, which is like OI usage flow, right? But when you don't have that, you shouldn't just make arbitrary metrics your thing in hopes that sticks. That's sort of what I distilled your Qureshi's law to.
Let go. Yeah, exactly. Let go of like trying to capture the real thing you want if it's too amorphous to be able to capture, right? Then just decide for a sub goal that you can't actually optimize for. Like, let's say I want the biggest AMM on my chain to have a lot of stablecoin liquidity. Right, because that's one thing that I care about. It's not the real thing, but it's one metric I care about. I'm going to distribute tokens or distribute points or whatever toward that thing because I know it's valuable, and I'll only do it up to a point. I don't want it to be like billions of dollars of TVL on my chain of just stablecoin liquidity because at that point it's kind of pointless, right? It's sort of excess things. So I think that's the way if you're at layer 1, you should be thinking about it and moving away from this idea that I'm going to create a community. You're not going to create a community through your airdrop. Like it just doesn't happen.
Not a durable one. Yeah, I think the high level points is right. Like the points are a bootstrapping mechanism to a point, and the more targeted you are with them, having a long-term view of what durable engagement could be. And I will say, I mean, it's not an L1, but I will say, since Tom mentioned it, I do think Blur was like one of the best projects to do this, where they actually found PMF first and actually tested it without points, and then was able to layer them in even to get that extra leverage.
I mean, what's so incredible about Blur is that they kind of both invented the game and nailed it. They pretty much did it almost better than anybody else who came since. Hyperliquid, obviously, very successful example, but then
the second version was not very good, right? Like Blast, like Blur created
Exactly.
the points
And I
thing,
think that's
and then
part of the
Blast caused the downfall. I feel like after Blast, everyone's
totally.
expectations were ruined.
Yes.
Yeah,
And
but
part of the difficulty is that you can't play that same playbook with a blockchain. A blockchain doesn't have the same kind of easy, legible metrics of what it means to be successful.
Yeah. I think I kind of point to Base as also just one of like the best executing teams that's building a new chain this cycle. And like they are sort of, going the total opposite direction of a lot of these other teams, right? Where like there is, no token, there is no points, there's no incentive program, but like they've been able to attract, I think, so many interesting devs, so much activity within the EVM ecosystem. I mean, even Freysa that was a Base project. They're not doing that to try to get some token airdrop, but it's like, yeah, if we just support devs and have, that's sort of the community, then it sort of becomes this self-fulfilling prophecy. So I don't know, maybe the industry is obviously due for like a healthy reset and rethink when it comes to incentive programs, at least on the sort of blockchain level.
I mean, Base is definitely incentive light in that, when we talk to a lot of these early stage founders and they shop around to say, hey, who's going to give me a grant? Who's going to support me the most? Who's going to give me the most dev resources? And Base usually is the lowest when it comes to like, oh, we'll give you like some, GCP credits or something. Like it's like a very, very light.
Jesse will tweet about you.
Yeah, exactly. Jesse will give you a tweet and then like, maybe we'll feature you in like the Coinbase monthly newsletter or something. And that's kind of it. And still, they're getting a huge amount of the top of funnel of entrepreneurs because it's just such a strong community. And the thing is, the people know that the Base community is very durable. They know that these are not tourists. These are not farmers. These are not people who are just shopping around for the best deal. Now, to be clear, the marginal entrepreneur is not going to be able to replicate what Base has. Base has had an enormous branding and distribution advantage that is very difficult to replicate. Even Binance is jealous of what Base has managed to accomplish. And it's a big credit, obviously, to Jesse and the whole team there. But it goes to show that, relative to these people who are just, spitting out massive amounts of incentives, the incentives are just, there's such low ROI past a very, very low base point that the incentives alone are not going to get you there. And that I think is the biggest lesson. So, okay, let's switch gears a little bit and talk about another exciting topic in crypto Twitter lately, which is DeSci, which stands for Decentralized Science. So Decentralized Science, it's kind of been in the wings for a long time. It's been one of these things that's sort of, these pockets of a few startups that were doing what's called DeSci, but lately it's gotten a lot of attention because of CZ. So CZ tweeted soon after getting out of jail and coming back into the fold of Binance that he was very interested personally in DeSci. And then Vitalik and CZ showed up at a house in Bangkok for a thing called DeSci Day. And this seems to have really revitalized a lot of interest in DeSci. So DeSci, just to be very clear, what exactly is DeSci? How can science be decentralized? So really what it means is that we're doing science with some kind of token/crypto edge. The most common form of DeSci projects is some kind of crowdfunding for experiments. So we say, okay, we're going to try this particular drug or this particular compound. And if you crowdfund this particular compound, if it's successful, maybe you get a cut of the revenues, or maybe if it's successful, you get nothing but like a little participation trophy. Kind of depends on the DeSci project, but that's most of the shape of DeSci things that I have seen. Now there's a new generation of DeSci projects, one of which is called Pump.Science. So Pump.Science, it basically gamifies and tokenizes longevity experiments. So basically drug development for longevity that might be used to elongate your lifespan. So far, Pump.Science has 2 tokens, one of them called RIF, which stands for rivampicin, and the second Euro, which stands for Eurolithin. Both of them have pumped like crazy, especially since all this DeSci attention has been driven by CZ and Vitalik. And the way that Pump.Science works, my understanding is that they launch these tokens on Pump.Fun. And if they, escape the bonding curve and end up getting on Radium, then you can just trade them. And I don't know exactly how this leads to financing the drug development, but I guess they own some of these tokens at launch, and they sell the tokens into the liquidity pool in order to finance the drug. I don't totally know. Anyway, Pump.Science got hacked. There was some private key leak, and so people are kind of freaked out about that. But anyway, there's been a lot of talk about DeSci. I think Smokey the Bear from Bear Chain has been very critical. Andrew Kong has been pretty positive, saying that feels like early DeFi. And Tarun, you have been recently notable in how aggressively anti-DeSci you have been. Talk us through a little bit. I don't know, this sounds interesting, sounds new. Why would you be so anti-DeSci as a VC? Why don't you like what people are doing in trying these new frontiers of science?
Yeah, so I'd say the context for this is that, I worked in privately funded science for 6 years, where it was like a billionaire funding everything. And so I've seen the benefits you get from going outside the academic system. The academic funding system in most countries is the government has sort of like a grant system, professors and postdocs apply for grants. But the system is extremely bureaucratic in the point that it kind of incentivizes people to, you have a better chance of getting a grant from providing a marginally improving project that you're proposing, rather than proposing something crazy, because it's sort of like, government bureaucrats, and they're like, okay, do the thing that, you're most likely to get a paper out of, not the thing that's most likely to fail. Now, on the other hand, you could argue that that's because there's like almost so much accountability that you can't get funding for doing crazy things. And so I think the privately funded science world has been about that. Notably, most of the successes in privately funded science are, basically probably Google being number one, winning multiple Nobel Prizes, including from my first boss. My old work, also having a lot of papers, Nature papers and stuff. And then I think we're starting to see some of the other tech companies kind of like build bigger bio stuff. Like Facebook actually used to have a really big bio team. Everyone left and started computational drug discovery companies, and now Facebook's trying to do it again. So I think like there's actually now this renewed interest once DeepMind won the Nobel Prize this year. But my point is, having seen privately funded science be successful, a lot of it comes from the fact that there's still some accountability. Even though you have this sort of blank check to do a big project, there's accountability structures of like, okay, like you're spending the money on X, and like we need this type of budget for Y. When you look at these DeSci projects, generally it seems to be, my impression of them from the ones I've seen, is like a lot of like kind of median or below median peak quality PhD students who are like, I can't like get any grants. Let me just make a meme coin and then pretend I'm going to do science. And like 90% of these people are just like, and especially biology grad students. And I think a lot of them, A, don't understand anything about crypto. B, you ask them about crypto mechanisms, they couldn't tell you how anything works. And C, they're just like, oh, well, once we get the money, we'll like definitely send you back the money once we get a drug, right? And drug discovery is like not something that is very easy to fund in a lot of ways. There's actually this kind of apocryphal name. So, Moore's law is the thing for hardware, for transistors, that every 18 months, the number of transistors per square millimeter doubles. But for drug discovery, there's a thing called Eroom's law, which is that the cost of getting a drug to stage 3 is like doubling every 2 years, roughly. And so like getting a drug to stage 3, like the final phase of a clinical trial, the average is somewhere around $4 billion to $5 billion now. And that's with many stages of tiered development and sort of attribution to like why things work. So the idea that like someone read like one paper that happened to have like a couple of statistics in it and raises $2 million via their dumb meme coin to make the drug is like already crazy. The second thing I think that is important is like there are crypto things that are DeSci that could be good. And I think Brian Armstrong and Vitalik I'm not sure about CZ. He hasn't like said much on his philosophical side or like what things he counts within DeSci. And this is why I think we have this proliferation of scam meme coins, is because like everyone's heard CZ say it and then they just made a bunch of these. But Brian Armstrong and Vitalik have very clear kind of goals, right? And Fred Ersham I would also put in this category, where they are funding things and seeding things that have sort of roadmaps and goals, and sort of like, hey, if we reach a certain point, there's sort of some type of unlock. Vitalik in particular is most interested in sort of the prediction markets side of things. So one thing that people in drug discovery have always complained about is like there's no real way to hedge your costs of a trial failing. Like you might spend $400 million over 5 years to do a stage 2 trial, but the only way people bet on that is via your stock. In some sense, biotech stocks are very much like crypto. They're very kind of low liquidity, edge technology, and you might have a 0 or 1 outcome of like you got hacked or you didn't, or you don't get listed or whatever, right? And so the problem is betting on the success of a drug company as a portfolio of drugs based on a single asset, even though it might have like 5 different trials going on at the same time, is not a very effective measure. Instead, you could imagine a more effective measure that is sort of an attribution system. It's like a prediction marker. Like I'm predicting this drug trial will work or not work. So Vitalik is very focused on these more like real mechanisms that take advantage of crypto. And those are totally great, right? But when you look at the stuff,
prediction markets on whether a drug will get approved or pass, stage 2
or
or stage 3.
some scientific experiment where you have to put a lot of money in up front, and then you have a hypothesis, and then predicting the end goal. That's something where the crypto mechanisms are actually useful, right? Versus like, oh, I'm just raising money as an ICO. Like, not, I would call most of the DeSci coins, they're just DentaCoin for like biology grad students. They're like, they have nothing.
So hold on. So you said a lot there, True. Let me see if I can summarize.
Yeah.
It sounds like your primary arguments against the DeSci mania we're seeing right now, or mini mania, is one, the quality of people is pretty low. These are like the dropouts or the rejects who can't actually go do real drug discovery fundraising. Second, it sounds like you're saying that there's so much capital required to actually get one of these drugs to the finish line that raising a few $1,000,000 through Pump.Fund is just like a joke. It's not going to get you there. So they can't really deliver what they're claiming to deliver. And then third, it sounds like what you're saying is that the real problems with drug discovery are not the capital formation. The real problems with drug discovery are having more liquid markets around the intermediate phases of figuring out whether these things will pass the successive stages of science. And so betting on, creating betting markets on, will this study replicate, or will this thing pass stage 2 trials or stage 3 trials? That's really socially valuable. But having this like speculative market on individual ideas by PhD students, that's like value destructive.
With no accountability, right? There's no like, if they find the drug, there's no, that's the thing that I think is the craziest, right? You raise the money, and they're like, oh, yes, all the IP ever made around this is licensed to this DAO. Given all the lawsuits against DAOs right now, I do not even think that will even stand. That even if they wanted to pay the DAO, that it would work. And so I just kind of think, like,
I guess, how would you even raise more money? Like, let's say, okay, you've got a promising initial experiments with this drug, and now you're like, great, now we got to take it to stage 1. We're gonna have to raise $20 million in order to take this to stage 1, and like Pump.Fund is not going to give you $20 million. So what does the DAO get diluted? Like how exactly does this work? Does everyone vote on whether to take the dilution? I guess in principle you could.
Constitution DAO not working is a great sign of what will happen to most of these DeSci DAOs. So I think like things that are mechanisms that take advantage of crypto, that should be funded for sure, right? But like these things that are just like ICOs with like long names and like cite one paper are like as idiotic as 90% of ICOs in 2017.
Okay, so let me give you a little bit of counterpoint, and then I want to get a reaction from Casey and Tom. I think what some people might say, I haven't read any of the pro DeSci people, and I don't spend a lot of time on it, but I would assume what some people would say was like, look, you are speaking very much from within the current enterprise of how science is done. When you really break the rules, you don't really know what's possible. It's possible that some of this drug discovery stuff is happening outside the US. Maybe it's happening outside of the, outside the FDA system for drug approval and drug discovery. It's also possible that these things could get sold much earlier in the timeline relative to actually, single-handedly raising all the money to take the thing to the finish line. And one of the things that we learned from DeFi is that there were a lot of bad ideas in the beginning, and people wasted money and did stupid shit. But eventually, like collectively, they were able to learn and create better and better, more useful products over time. Like, why don't you allow the same thing to happen in DeSci that happened in these other domains?
So yeah, I guess I'll go through your criticisms one by one. So the first criticism of like, hey, people, well, that's just the US. What about not the US? So a lot of drug companies actually do their drug trials in other countries that are cheaper or have weaker regulation first, and generally get drugs passed to stage 3 in Madagascar much earlier than stage 3 in Western countries. And they do that. That's how they kind of get like, that's sort of this like regulatory arbitrage that they do for like getting to first time in man quickly. And so that's already being done. So I don't think that there's that much more efficiency you can get from that. And I'm not sure the decentralized part helps you that much. The second thing, which is, the kind of like risk transference aspect. And this is where I think the D in DeSci is actually useful. And this is why I think the prediction market stuff is probably more valuable than the like raise money for my drug. 50 years ago, an average small biotech company tried to exit by actually going public and having a drug that worked, and like their stock went up. By kind of recent years, most compounds designed by smaller companies and smaller groups of people all exit to large companies because the marketing and distribution costs are too expensive. Running the trials is too expensive. And so like, if you even look at like the vaccines, like why is it called the Pfizer vaccine? Pfizer didn't even fucking invent it. It's because it was too expensive to actually even get to production and get through all the regulatory costs. So Pfizer like did a joint venture, but like realistically they own a large percentage of it. And so there's kind of this thing where, yes, there is actually some value. And like my old work, realistically, we spent like $1 billion on like building hardware, doing tests, whatever, over 15 years. And we sold like 4 compounds for like $500 million. So like, I mean, yes, maybe we get royalties, or my old work gets royalties on them, whatever. But it's like people are doing those things. They are somewhat inefficient. And I think like if you had better markets for like the existing system, it's almost a better use of capital than like speculating on like, it's almost like saying like, hey, like, I hope that you can train a foundation model on $1,000. Like, no, if I told anyone that, they would like laugh me out of the room. And that's kind of what the DeSci people sound like. On the other hand, like I said, there's things that could be good, but unfortunately did you have a third? You had the third point, right?
But the last one is like, why don't you let people faceplant and learn? That's what DeFi did, and DeFi turned out okay.
So DeFi, this gets back to our thing about good metrics. In DeFi, there are actually good non-gameable, or at least costly to game metrics. And whoever won that would take advantage of taking some market share away from the centralized equivalents of them. And that was a very clear value prop. Like, your product works if you're able to design enough features that people want to move from centralized to decentralized. That's not clear here. Like there's no obvious. This has it even worse than the layer 1 problem of what do I spend my points on.
Casey, as the frontier tech investor, what's your take on DeSci? Do you agree with Tarun, or do you think he should lay off?
My take of what DeSci is today is pretty simple. It's that crypto people make a lot of money and they look for places to rotate it. And they rotated that into a variety of things. DeFi, meme coins. DeSci is just another vertical that they say, great, I can stay on chain and I can put money here and it might rip upwards. And I like the EV profile. And I think it's that simple right now. I think the vast majority of DeSci, as Tarun said, is really just they're trying to get beta to science and they're trying to get access to it in a way that's on chain. It's actually really rhymes with what we're seeing in the AI space, where a lot of these tokens, they're not even or people can't even differentiate between them. They're just saying, okay, this is AI on chain and I want some exposure in my crypto portfolio to AI, because AI is generally hard to get exposure to with where NVIDIA stock is. And so I think it's mildly interesting, but I agree that the mechanisms are pretty basic and raw, and it's not very inspiring, to say the least. I do agree, like the prediction market, and I think that we'll see maybe even new mechanisms that come about that are more crypto native. And then I think I'm just like super bearish on DAOs. I've always been bearish on DAOs. I don't think they work. I think they're like a ternary kind of outcome of there's like other things in crypto that have led to them. And I have a really hard time believing that that's the right format or structure for deploying money. And so I just like don't think that's really a core feature. So any like the DAOs that are really singing the praises of that, I'm kind of against.
Tom, what's your take?
Yeah, I mean, I think everything that Drew said could probably also be said about ICOs. And I think the important thing is like, it's not, it's sort of like an existence proof. It's not that this is the best way to fund startups or to fund projects, but it's like, yeah, you need, 1 or 2 hits to sort of demonstrate that, yeah, maybe you can actually have this thing work. And like, I would say like Ethereum being a good example of that. But yeah, I mean, you have like, no accountability, no real guarantees that like this token is going to do something. I don't think anyone is thinking that, yeah, we're going to raise billions of dollars and, take one of these drugs to market. But it's like, yeah, I mean, you also read about, families that, they're afflicted by some, very niche illness, and maybe there's some, drug on the market or went off market and they want to fund it somehow. And this feels like actually maybe not the most effective way to do it, but it's like, why not kind of let the market feel it out versus, I also feel like kind of similar to ICOs. It's like the looser, the better. I think the tokenized IP stuff is also very stupid, but I think the idea of it's like, yeah, you buy this token or you put some money into a contract and like, some of it's going to get funded to something and hopefully it goes well. And maybe the token will do well. Kind of like, DJT, Truth Social. It's like, are people buying that because they really want to be bullish Truth Social? No, they just like want to support Trump. And this is the way that they're expressing that. And I don't think you have to like sort of overanalyze the market structure around DeSci. Although I think all the points maybe around the quality of participants, I'm going to sort of defer to Tarun's judgment on.
I was going to say, I think one thing, agree with both of what you were saying, and I think Tarun brought up some really incredible points. I think that what we're going to see, just given the cohort of people that are in crypto today, I would be very surprised if DeSci is bringing in a new cohort. I think it's that the current cohort of people that own crypto are generally interested in these things because the ICP of it is interested in frontier tech because they're tech forward. And so one thing that I could really see materializing is frontier, insert new frontier tech vertical X crypto, and that being another category. Like I actually think the neuro X crypto category might come to fruition in 2025. We'll see. And so, yeah, I think this isn't limited to DeSci. And I think that it's just, I want to call out that I don't think it's a different cohort for what it's worth.
Yeah, I think actually, Casey, your mental model of this really clicks for me. Like if you look at the drugs that are on Pump.Science, they're all about longevity, right? Which is actually a very narrow part of the drug market. Most drugs are about weight loss or, baldness or, some kind of sexual performance drug. Like those are by far the biggest markets for drugs.
I think the largest market's still the cancer drugs, although GLP-1s are getting
right?
close.
Okay,
yeah,
right,
cancer drugs have infinite.
All right, got it. All right. I obviously know nothing about this, so I'm judging from TV commercials. And of course, like longevity is just a tiny, tiny fraction of this, which of course intersects perfectly with what crypto people are interested in. So there is some sense in which this is not an entirely commercial enterprise. This is okay, you're super rich and you kind of want to play science and like put on your little lab coat and, bring out your magnifying glass. And it's like, okay, cool. This is like your way to play science and it's fun. And you can like exit early.
I like that the meme coins are like cosplay. That's like basically what you're saying. It kind of is, right? And like it's sort of self-consciously so. Like literally there's this science being launched on Pump.Fun. Like, okay, they're kind of, it is not entirely tongue-in-cheek, but it's also not entirely self-serious, right? It's literally called Pump.Science. So there's a sense in which like people kind of know, like, yeah, you buy in early and then you sell, once it goes up 10x. So like you're not really along for the ride. You're not really playing for like stage 3. You're playing for like the mimetic factor, and it's inflected with this science-y kind of vibe. And it's a little bit like, you go on Character AI and sometimes you want to talk to Harry Potter, and sometimes you want to talk to, Batman, and sometimes you want to, whatever. And it's a little bit like, okay, you want to trade meme coins. Sometimes you want to trade science meme coins, and sometimes you want to trade, racist meme coins. And like, there's a different flavor for every day of the week of whatever you're feeling inside. That feels like a better explanation for what's happening right now in DeSci than that it is serving an underserved part of the market, or that it's trying to displace funding mechanisms generally. I think it's plausible that someday it could get there, but the reality is that, to Tarun's point, biotech funding or, drug discovery, pharma funding is very, very specialized because it's extremely technical. It requires a lot of background knowledge, and it's exactly not the kind of thing that ordinary people off the street are investing into. And when they do, they're almost always just tons of adverse selection. Look at the cassava thing. So there's this Alzheimer's company that was down 90%, but it was like the meme stock favorite. And it was because no one kind of bothered reading the pre-trial data. In fact, Martin Shkreli has a long diatribe about it like a week before the thing blew up, and the stock was still going up. So I agree with you that fine. Just call it science meme coins. The DeSci thing is a scam. Like they're just science meme coins. That's fine. Then whatever.
Yeah. Okay. So if they self-style as science meme coins, then Tarun, you're okay with it.
Yeah, whatever. That's no different than WIF. Just maybe get on the Sphere instead this time.
Got it. What if they're science meme coins, but they do send some of the if they ever get acquired, they send the revenue back to the token? Would you have a problem with that? Did we lose him?
Tarun rage quit. He didn't like they were saying kind words about DeSci.
I think this thought experiment I was bringing up for him just made his brain break, and so he had to exit. Anyway, we're at time, so we got to wrap. Thanks everybody. Thanks Casey for joining us, and
Thanks for
we'll see
having
you all
me.
next week. Ciao everybody.